Hi, everyone. Welcome back to the channel on the college process. Once again, I'm Ed from Principia Prep. And today we're going to be doing, as I talked about in all my videos, every Friday, I go back into the comment section, look at all the questions you guys are asking me here for the week, and then answer your questions here in video format, detail format. So that way everyone has answers to all their questions. Now, obviously, this is a little bit of a short week because of the holidays and everything else. So there's not as many questions as before. Typically in this situation, I would wait a week more to basically just do one video for 2 weeks of questions. But I figured let me just knock out these video questions right now. That way everyone has their questions for this week. So that being said, let's jump into the first questions here. First question here from Jose. I'm a parent with a child going to a college in California. I have 2 questions. Question number 1, in order to shop around and find out what my best loan option, I have to apply for each loan, I guess that's what you're asking, and take a hit on the credit score, correct? Not really. This is one of the things a lot of parents don't understand about the student loan process and how it works as far as affecting your credit score. The way it works is you can actually shop around over a 30-day period. So you have to do this all within a 30-day period, by the way. So you can't do this, let's say, this month, and then next month do it again, start looking for loans, and the next month start doing again and keep doing applications. That will affect your credit score. If you do it the proper way, I guess the best way to call it, and the way I talk about in my videos when you shop around, is if you shop around for multiple lenders within a 30-day period, it will not affect your credit score. It'll just have one hit. It won't have multiple hits. So it's not like you go get a Visa and a MasterCard and Discover card and it just keeps dinging your credit. Boom, 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 dropping your credit. Not the way it works here in the world of student loans, call it. In the world of student loans, the way it works is you have 30 days. You can shop around, choose as many lenders to basically apply your information to and see who gives you the best rate. Within that 30-day window, it's only going to hit your credit once. So if you're looking at it from hitting my credit and lowering it a lot, if I'm doing a lot of lenders, not going to happen. And also, the reality is, if you watch my other videos I just put up last week, which is actually the video you're talking about here, the top 5 student loans out there to kind of consider for parents paying for college through student loans. In that video, I also talk about most of the top lenders have the same exact rate at this point in time. So the reality is, if lender 1 versus lender 2 give you the same rate, very likely lenders 3, 4, 5 will give you typically the same rate on the private side. So after the first 2 lenders or so on the private side, the rate they're going to give you is the same rate every other private lender is going to give you. So that being said, since if you do that, let's say you do go shopping for the private lender, get the rate they're going to give you based on your credit situation, your debt to income, and everything else scenario-wise you're looking at, that's the rate you're going to get from most all the private lenders across the board. That being said, then you have to realize and kind of think about, as I'm talking in the video, is it make sense to go this way, or does it make sense to go with the state loan? Or does it make sense to go with the Parent Plus loan, depending on where the rates are, your situation, and your terms and everything else you're looking at? Obviously, that's the key here. So it's very unlikely, and I've never seen it happen before, where a parent will go apply, let's say, 7, 8 different private lenders and get varying different rates. All the rates are going to be very close to each other. They're not going to be that different. So after applying for maybe 2, 3 of the private lenders, at that point, you know where the private lender sector has you as far as rates. Then it's just figuring out, does this make sense? Or does the state loan make sense? Or does the parent loan make sense for us in our situation? So that being said, let's go to the next question here, coming in from Nia. Can you please discuss the best way to find scholarships in college? Now, I actually have videos on this topic, by the way. So there's various different ways to get scholarships when your student is in college. Most of the time, it depends on the student's academic profile when they're in this school. If your student does well academically, typically a 3.5 out of a 4 scale, which is almost every college, a 3.5 and above basically puts you in the Dean's List category. Being Dean List category means you're in the top end of all scholarship consideration at the college if they do have additional scholarships for continuing students. One of the first places I would go, even typically for my student starts, is either the admissions office or financial aid office. Either one of these, you can go to either department and ask them, are there any scholarships available after we start if we make the Dean's List, if we do it good academically? Or are there additional scholarships in specifically for our major? In the world of college, typically when your student starts the school, whatever scholarship they start with, that's what they start with. There's not going to be an increase from that perspective of that scholarship. However, alumni give the schools a lot of money, and a lot of the time they say to the school, we're going to give you this money, and we want this scholarship created. And sometimes that scholarship is only available for sophomores that have good GPA, or juniors in this specific field of study, so on and so forth. So I'm asking admissions and financial aid because they'll know, those 2 departments will know, if we do well academically based on our situation, our region, our major, our GPA, whatever it is, if there's more money they can give us, an additional scholarships to what they've already given us to school from the alumni. Because in the world of college, if your student goes into college and they do phenomenally well academically, 4.0 every semester, all A's, all A's, all A's, they're still not going to increase the scholarship they gave you. So we can't look at it from them giving us more money. It's, does the school itself, does it provide more scholarship money based on what alumni have done and set up in place for us to get more help. So that's from the college perspective why you're in. You can also go online. I do have videos on the channel here about scholarship searches, but places I would go would be collegeboard.org. CapX is another place I would go as well. I'd also look at scholarships.com, meritaid.com. I'd go on as many different websites here. FinAid, another scholarship site I'd like to utilize as well, to see on the private side. But you also have to realize the online scholarships, even though there's scholarships available, believe it or not, all the way into PhDs, so basically as far as you can get in the world of college, say 7, 8, 10 years down the road, even though there's scholarships available for that on the private side, the online scholarship searches, so on and so forth, the reality is they're hyper competitive. You're competing against not like at the local level, high school, a few students. You're competing in some cases tens of thousands of students for these. So those are more difficult to get. So I like to look at the college first, then I do the scholarship searches online. But those are the way I would look when my students in school for additional scholarship consideration. Okay? Next question here, coming in from Linda. Looks like Linda has two, but we'll start with this one here. Our bill comes out June 20th and is due July 20th as well, with no late fee waiver. How does a very short window still fall under a certified loan? I guess the question you're asking is, if we only have a month to apply for loans, is that enough time? And the answer is yes. As I talk about in the video you watched here, the reality is most loans, once you apply to loans, once you're typically pre-approved and once you've gone through the process of a hard pull as far as a credit score pull, they typically automatically completely authorize you to have this loan funds available, and your school is notified typically within 24 hours. So the reality is, if you go out there and get a private lender or a federal lender, as far as the Parent Plus loans call it, any of these loans, even the state lender, once the loans are in place and you've been approved and everything's gone through as far as your credit and everything else, what happens is the school is notified 24 hours later. So they know at some point loan funds will be coming from this lender. Now, as far as the loan being certified, if you're asking about the certification of the loan by the school and then pulling the loan funds in, that doesn't matter, because of the fact that the way student loans works is this. I'll give you guys kind of an overview. You guys apply for student loans, whether it's private loans, state loans, federal loans, whatever loan you're applying for. And I say federal, I'm talking about Parent Plus loan. Once you apply for that loan, you get approved, the school gets notification from that lender. Basically, they get a list from this server here, this system here, this app, let's call it. This app sends them a list of students who've been approved for loans, no matter what that loan is, state, federal, private loans, etc. They get a list. Those loans then are put on the student's account as far as the amount they're getting and where the lender is coming from as far as who's providing that loan for that student. That's in the system to show the billing office that that loan's in place. Now, as far as the certification, what you mean by certification is the school basically says, yes, give us those monies, send them to us. Certification of the loan, or what's known as also an origination of the loan, doesn't happen until typically a month, in some cases a month and a half after the student's in school. So the reality is the loan fund doesn't actually get created, let's call it, as far as the money going to the school until about a month or so into the semester. Now, obviously, as parents, you might be a little concerned about that, but you shouldn't be, because it has nothing to do with you guys. It's just a paperwork situation happening as far as moving funds around between the lender and the school. The only thing you should be worried about as a parent is getting the loan approved for you guys before the date of the bill being due, July 19th, July 20th. Once they see in the system, the certification, the origination of it is irrelevant to you guys. The school will take care of that. If you want to make sure it's being done properly, you get your loan, figure out which one you want to do, tell the lender we're going forward with you guys. Once you go forward with that lender, then at that point in time, basically a week later, call the school's billing office and ask them, do you have my loan on my file? If they say yes, it doesn't matter when they originate it, it doesn't matter when they certify it, it doesn't matter when they say yes, send us the funds. That is irrelevant to you guys. It doesn't matter at all. Unless you're looking for a refund, then obviously I want to know when you're originating it so I can get that refund to then help pay for what I'm using that refund for. Books, laptop, housing, off campus, etc. But other than that, their origination of it, their certification of it, the pulling of the funds is not a big concern for you guys. Okay. Next question here from Linda. Is it better to take a loan per semester or while school year or all at once? Well, when it comes to student loans, I'm a proponent, and I've been saying this for basically my 25-year career. I'd rather have a loan in place in the sense that I'm taking out the loan for the whole academic year. The reason I'm doing this is because of a few factors. Number one, credit. Now, when it comes to credit, I'm talking about the interest rate situation. If something happens to your credit, maybe you miss a visa payment, maybe you miss a mortgage payment, maybe you forgot something and it hits your credit score and it drops your interest and it drops your credit score down. This can obviously affect the interest rate later on, where you might have a decent rate now, which then can increase later because of something happening. So for me, I always want to lock it in just to be confident that that year is taken care of. Also, from another perspective, interest rates keep rising, unfortunately, because of the inflation situation we're in. Now, obviously, the Fed said they're going to stop for a little bit, but no one's specifically saying they're going to stop, and everyone knows they're going to stop. They can keep raising rates if they feel like it, based on the fact of the economy. And with higher rates from the Federal Reserve means higher rates for student loans. So I'd rather lock in the rate I have now, get the fixed rate in place, and be done with it. Another consideration too is the fact that if you do different semester loans, you're creating different loans. Even if you're doing it through the same lender, you're creating different loans, which creates different payments, which may be more confusing later on. I'd rather have 4 loans for each year my student's in, and at the end of it, if for whatever reason we have lower rates later on, which is hopefully will happen, then we can refinance all those 4 different loans we have into one refinance company and have one payment. But if I'm doing it every semester, I'm technically getting 8 different loans, which makes it even more confusing. But let's just say you got all 8 different loans from a private lender, and you had sent payment to 4, 5, or 6 of them, and you didn't realize you actually missed payments 7 and 8. That's going to affect your credit score. So I'd rather minimize the amount of different loans I have out there just to make it easier on me. So for me, from a bunch of different perspectives, I'd rather just do a 1-year academic loan, get it covered out of the way so I feel comfortable, nothing to worry about later on in case my credit score drops down or interest rates fly up, whatever may happen. All right, looks like we have no more questions from you guys here on the channel. I appreciate all the questions you guys leave here. Once again, if you guys are watching this video for your answers for your questions, or anyone else watching this, maybe trying to get some information about the college process, if you have questions on any of the videos, please leave the questions here in the comment section for any of the videos out there, and I'll make a video for you guys out there answering all the questions you guys have out there. Other than that, on the screen is my contact information. If you need help in the process or you want additional assistance in the process, whether it be financial aid, loans, admissions, so on and so forth, I help families with the entire college process. On the screen is my contact information. If you'd like to send me a text message, that's actually my cell phone, and text message, by the way, is the easiest way to reach me. Just send me a text letting me know you'd like to meet. I meet parents over Zoom to basically help out with any process they need help with. Other than that, you could also email me. And other than that, thank you guys for watching today's video. Once again, my name is Ed from Principia Prep.